Well, let's go ahead and transform this conversation into currencies, and let's go take a look and see what's going on this week with currencies. Now, we know that the ADP numbers are coming out on Wednesday. Then we are following it up with the non-farm payroll coming out on Friday. We see that if you look at the data on the non-farm payroll, the data actually reporting that we're going to see lower numbers. Everything's going to be really terrible for the dollar on Friday. But the ADP numbers, which is almost like a leading indicator, is stating that we're actually going to see positive results on Wednesday. And so my 2 cents, guys, on the dollar right now, I like the dollar. I actually spoke about it in all my sessions today as well. I like the dollar play this week being bullish in the short term to about Wednesday, Thursday, and then start seeing a turnaround Thursday into Friday being bearish on the dollar. So today I'm thinking dollar correction for the next couple of days, and then dollar weakness as we're moving into the latter part of the week and into the weekend. Starting next week, dollar weakness all day long. And I can go to a couple of charts and go ahead and speak about that. But Chris, you want to say something?
Yeah, I wanted to ask, so dollar index, for the last probably month, I've essentially just drawn an arrow. We have a nice yearly pivot at 12,090. We have a monthly pivot back down to equal lows at 11,827. So if anyone's taking notes, 11,827 to the downside, 12,090 to the upside. Truthfully, fellas, I don't care which direction plays out. I'm going to make money either way because I'm long dollar Swiss and I'm long euro dollar. So I just think, I mean, we had our, one thing that I noted was August is usually a really important seasonal time where we have this tops and bottoms form in August. We have transitions from ranges to trends or trends to, typically we see a lot of breakouts post summer. So look for volatility to increase in September, look for trends and breakouts to emerge. And so dollar is definitely a basket that I'd be watching really carefully. I do think there's room to travel, for the sake of volatility, the dollar's going to go somewhere. Aussie dollar, New Zealand dollar, dollar CAD, it's really going to be an interesting move to see, like, is it dollar versus commodities or is it just dollar strength or weakness across the board? That I can't quite figure out yet. But we did see that when we had the dollar strength going into the highs of August, the only real reactions we had in the currency world for Forex is we had Aussie was really weak versus the dollar. CAD was really weak against the dollar and New Zealand. And then last week, they all corrected. So we're seeing a lot more movement out of commodity-based pairs than we are out of like the euro and the yen and the Swiss, which are more like kind of the safe haven and stable currencies. So like I said, 12,090 yearly pivot, bullish play on the dollar. I think that plays out over the next probably 1 to 3 months, or 11,827 monthly pivot, falling back in to find some structure, finding back at those FOMC pockets back in June. There's a really nice bullish channel on the dollar, in my opinion, that I think there's support down at the levels I mentioned. And I'd say if we're going to have kind of a final move up on the dollar before there's really significant weakness that kicks back in, I think that's the yearly pivot at 12,090. So I'm just, like I said, I'm going to make money either way, but I am very interested in playing Aussie dollar at lower levels, New Zealand dollar at lower levels, dollar CAD. I know we kind of had this interesting play last week, Gary, and great job, by the way. Your live trades you talked about last Monday, those 20 pips on dollar CAD played out really nicely. So I just want to get your thoughts on the dollar index, what you guys think, timeline wise. But I am wanting to buy, Aussie dollar, New Zealand dollar way, way, way lower. But I just don't know if we're going to get there. It's going to be an interesting play. Meanwhile, I'll just sit in my positions and essentially hedge the dollar with dollar Swiss long and euro dollar long.
I love that. We're kind of speaking the same language. I don't want to take any bullish or any bearish aggressive stance right now. Saying that, money flow says to short the Aussie dollar specifically just for this week, but I was conservative on it. Meaning my play for money flow students, I'm looking to sell at 73.31. We're not there yet. We got to push up a little bit. We've got to push 40, 50 pips up. I'm looking to also sell at 73.70. I think we're going to push down to 72.40. Once we get there, 72.40, I don't know. I don't know if we break out and go to a rally or if we continue to crater down. But I am looking for, I think we have, so we're kind of in that no man's land right now. So, because my stop's at 74.30. So if you do the math, I'm actually only looking for about a 60 pip move down, potentially another 130 pips move up, but I want to have a bearish bias because I think we're starting to top a little bit. My point is this: I'm with Gary. I'm looking for weakness today, tomorrow, into Wednesday. I don't know if that weakness is gonna in the Aussie dollar. I don't know if that weakness is gonna sustain. We'll see, depending on the jobs number. I am becoming more and more of a long-term dollar bull. I don't know if I buy into, raising rates aggressively. I'm more on the Cathie Wood side of deflationary pressures, low interest rates for longer. I'm more into that because of what Chris mentioned at the beginning of this webinar, which is the jobs market, automation, technology, suppressing prices. We all complain about gas prices. I was just having this conversation with my wife. We all complain about gas prices, but here's the deal. 1995, the average car got about 12 miles to the gallon, and gas was $1.50. Now we're complaining about $3 gas, but we get 40 miles to the gallon. So do the math. You're still traveling the same amount of distance and spending the same amount of money. So it's not. So technology advancements have done a really good job of actually, sustaining purchasing power for individuals. And I think that the world we're in now is right for interest rates that are really low, maybe forever. And that's, I think, bullish on the dollar.
Yeah. Yeah. We keep talking about the other side of that, which is how long can we do this? How long can we keep, kind of engineering this bull market? We're now 13 years, fellas. 13 years into a major low in the markets. Once we put in that bottom in 2008, 2009, 12 to 13 years later, we're still going. Pullbacks are few and far between. I suppose if we have our healthy correction for COVID, which was like over in a blink of an eye, within 2 months we went from bear market and bull market in the same cycle. That's insane. But again,
to Chris. Where else are you going to put money?
No, that's what I'm saying. Is like that's what makes it so difficult. It's like people want to be permanent bears and call the tops. It's like, look, I'm willing to play some of it, but it's like I just think we're silly for fighting it. It's like remain in the path of least resistance. Understand that the environment right now is conducive for continued money getting pumped into stocks, riskier assets. You can make the argument that people are making more money and people's personal wealth is as high as it's ever been. It's like, well, I'd say that's within reason because
there's a big gap.
Yeah, I was going to say for those that are making money, it's ridiculous. And those that are not are wondering like, what the hell are you guys talking about? Very different story. So I think the gaps have widened. I think the K-shaped recovery is exactly what we're talking about. And I think that's why this is such a difficult, kind of like dichotomy of who the haves and the have-nots. So anyway, like to play the dollar, keep in mind, remember going into this year, how we had this conversation back in January. All of us were in agreement from the technical side that the dollar looked bullish. Now, it didn't happen yet, right? Like everyone's like, the dollar's going down. It's going to keep crashing. It's going to break those multi-year lows and the dollar's doomed. It's like from a technical side, I was bullish on the dollar. Fortunate that's played out because that's been 8 months. Is if you've been strong the dollar this year or being long the dollar this year, that's played out pretty nicely over the last 8 months. So again, trade the technicals. That's the end of the day. That's what we need. Trade the technicals.
Yeah, and I think right now, we're all kind of saying the same thing. Trade the technicals and don't get so caught up in a position that you're not willing to change. So I'm bullish on the dollar, like Gary said, through Wednesday, Thursday, maybe. We'll see how it's reacting on Wednesday, Thursday. I might need to change my stance or take my trade off and kind of let this week kind of play out. So you got to be a little nimble also.
Yep.
Well, fantastic, guys. I'm not going to add anything to that. I think you guys really nailed it there. It said it exactly how it is, and I appreciate everyone being here. Once again, go ahead and subscribe, share, and smash the like button. Let's get this video out, and I appreciate everyone. Tyson, Chris, thank you much. Thank you very much. Really appreciate you guys. Great insight, always great insight, and we can definitely learn from that. So with that being said, traders, have a fantastic week of trading. We'll see everyone back again, same time, same place. Here on the weekly investment draft on a Monday at 1 o'clock Eastern Standard Time. We'll see you then. Thank you.